the right time.
Good morning. This is all you need to know. I am Agam Vakil. Let's start off by taking a look at the global cues, and at this point in time, as far as the equity markets are concerned, mixed cues coming through, though we did see a little more weakness come in when it comes to the US markets, which includes the Dow Jones, the Nasdaq and the S&P 500 all declining by anywhere between 0.3% to about 0.5%. Coming down to Asia, or for that matter Europe is also looking at cuts of around 0.5%. Asia is mixed. Nikkei in the green by as much as 1%. Some declines when it comes to Hang Seng as well as the CSI. So on the whole, it's a mixed picture, and that's the reason why the SGX Nifty at this point in time is indicating absolutely flattish moves at around 11,385 odd levels. How were our markets yesterday? Well, we did see about a decline of around 0.7% for the Nifty. The same for the mid-cap index, a small-cap index, correcting by 1% yesterday. But the deepest cuts came in from the banking sector, where the Nifty Bank declined by around 1.2%, but the Nifty PSU Banking Index declined and extended losses by another 3.2%. Now, in terms of the other sectoral movers, IT was the only one which advanced on the back of the weakening rupee against the dollar. Let's take a look at the media index too, which also was really under pressure, down by as much as 3%. In terms of ADRs, we did have more weakness in Vedanta and Tata Motors. On the other hand, among some others, we did see some gains in something like a Wipro and Infosys, not too much to speak for when it comes to Dr. Reddy's. When it comes to foreign institutional flows, that we did continue to see about 972 odd crores move out on a net basis from the FIIs. DIIs, on the other hand, buying around 216 odd crores. And in terms of contributors, it was the heavyweights such as Reliance Industries, HDFC Bank, as well as the HDFC Limited, along with SBI, bearing down on the indices, which led to that 73-point cut. But let's take a look at the futures and options space with that. And we saw very little change in open interest when it comes to the Nifty futures. The Nifty banking futures, on the other hand, continue to see unwinding coming through, and a decline of around another 7.5% in open interest there. In terms of changes in open interest across the various options strike, it was essentially the 11,400 and the 11,500 mark which were the most active, while we saw more writing around the 11,500 put calls. We saw unwinding around the 11,400 and 11,500 puts. So we'll be watching out for that. But when it comes to maximum open interest, it continues to remain with the 11,000 put and the 11,500 call. Gives you a rough range of where the Nifty is expected to move in the near term, but the Nifty put call ratio naturally fell to around 1.66, and it was the same for the Nifty banking put call ratio, which moved below the mark of 1 at around 0.95. In terms of stocks, we're watching out for Apollo Hospitals, fresh longs even as the underlying advances by 13% on the losing end, and there were quite a few counters which lost out yesterday. Sun TV really under pressure, down 8%, fresh shorts there, and we also saw fresh shorts in Canara Bank, which also declined by around 4%, whereas an advance of nearly 10% in open interest. This is as far as our own markets are concerned, but now let's go across to Bloomberg's Paul Allen for the top international headlines.
The Congressional Budget Office has slightly cut its forecast for US growth this year, warning of growing uncertainty from President Trump's tariffs. The CBO now sees the economy expanding 3.1% through 2018, down from 3.3% forecast in April. It says growth will ease to 2.4% next year on slower business investment and government purchasing. MSCI is adding 18 stocks and deleting 4 from its ACWI index after a quarterly review. The only addition to the world index will be Japanese chemical company Showa Denko KK, China Shenhua, China United Network and Hengli Petrochemical A shares join the emerging markets index. MSCI says the changes will happen at the close of trade on August the 31st. At least 6 people are feared dead and thousands more have been displaced as Tropical Storm Yagi hit parts of Metro Manila. The powerful storm caused the Marikina River to burst its banks, forcing residents to take shelter in makeshift evacuation centres. The local council says it's declared an emergency for at least 20,000 people. Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
I think Turkey is a very small part of the index, regardless of what index you're looking at. So the good news is that the ETFs are not forced to sell down because of a decline in the Turkish market and the Turkish lira. So that's the good news. The bad news is that if Turkey is forced to close the foreign exchange window so that foreign investors cannot get out, that'll be very, very bad, and a bad example for other emerging markets if they're trying to try that going forward. As you know, in the past, during the Asian crisis, Malaysia did that, and it was very, very bad news. So this is something we have to watch very carefully. But the bottom line is that, you know, this is bizarre politics. You know, Erdogan and Trump are bargaining for this pastor. And, of course, Erdogan wants Trump to give up Gulen. And, you know, this is the kind of bargaining that goes on. And I don't think Trump can give up on Brunson. And probably Erdogan is not going to give up on wanting to have Gulen back. So this is going to be a real standoff, I believe.
I'm curious as to whether you think that it's time to be opportunistic. If you take a look at the sell-off across other EMs that don't have the terrible external imbalances that Turkey has, is it time to get in, or are you cautious? Because, to be fair, even before Turkey really erupted, the fundamentals in terms of the trade war, the strong US dollar, were not favourable for that EM space.
Oh, there's no question there are opportunities in emerging markets now because of this incredible decline in the currencies. But we have to be very, very careful about which countries we want to invest in and which companies in particular. And, of course, leverage is all the story. We have to be careful not to be investing in companies that are heavily leveraged. By the way, this story about Tesla is really about the debt and about its ability to pay all of the debts it has. And with interest rates rising, you're going to have problems with many companies around the world, not only in emerging markets, but in developed markets. And that's true of the countries. Country debt with higher and higher interest rates in dollars is going to be a real problem for many of these countries.
Has Recep Tayyip Erdogan backed himself into a corner by saying that he's not going to take a bailout internationally, and secondly, he's not going to raise interest rates?
Well, this is the problem, and it seems to me that the only opening for him would be to give up on Gulen and return the Brinson, return the pastor to the U.S. That would be the best alternative for him. And you may see that happening. There may be a face-saving effort on both Trump's part and Erdogan's part. But it remains to be seen. I can't be too optimistic, let's put it that way.
And if you're a depositor in a Turkish bank, would you be taking the money out and putting it under your mattress?
I am a depositor in a Turkish bank, and I've got most of the money out, but I'm keeping some in because I think longer term Turkey is going to be an interesting market to be in. But if you've got Turkish lira, of course, you're losing. In my case, I have U.S. dollars and a little Turkish lira, so I'm in pretty good shape. But I'm concerned about any currency controls if I ever want to get that money out. Wouldn't be the near future, but anyway, this is something we would have to look at.
Shifting focus to currency markets, talking about Indian rupee first, it weakened to its record low levels yesterday as emerging markets dropped amid concerns over risk of contagion from Turkey's financial market crisis. The rupee depreciated over 1.6% to 69.93 levels against the dollar, its biggest fall since September 2013. Traders do believe that RBI did intervene in the currency market to stem the rupee's fall. However, the rupee ended just 7 paise away from key psychological level of 70 mark. Speaking of the bond market, sovereign bonds too slipped yesterday as yield on the 10-year benchmark security ended 7 basis point higher at 7.82%. Well, on the global front, dollar index ended higher for the third straight session, and it now trades steady well above the 96.3 mark. That apart, Turkish lira dropped to its weakest level ever versus the greenback yesterday. Remember, Turkish lira has depreciated over 45% versus the greenback so far this year. Elsewhere, euro and pound now trade steady against the greenback. And lastly, speaking of dollar rupee, now it is trading flat in the non-deliverable forward markets, which indicates a flat opening for Indian rupee in today's trade.
Well, amongst the stocks that we are tracking includes Max India, which will be in focus on the back of a ET report, which says that Bain Capital has now joined KKR in the race to acquire 47% stake in Max Healthcare, and this is for about $450 to $500 million. So Max India is the stock which will be impacted by this. That apart, you also have NCL Industries, where HDFC Mutual Fund has picked up 2.2% stake via bulk deal. Let's see how that reacts, because the stock ended 10% lower yesterday. Also, a strong set of numbers coming in from Diwan Housing Finance. Net interest income grew by 42% and net profit by 35%. Also, good numbers from Apex Frozen Foods. Now, sequentially, the revenues grew by 17%, net profit by 21%. The operational performance was even better, with EBITDA coming in 30% higher. Also, good set of numbers from Oracle Financial Services. Sequentially, we did see a revenue growth of 25%, net profit growth of as much as 70%, and EBIT margins also expanded from 31% to 45%. Good set of numbers also from AstraZeneca Pharma, in line with what we have seen for some of the pharma MNCs here. So revenue growth of 26%, net profit growth was restricted to 10%, but that's on account of a higher tax outgo. But if you look at the operational performance, EBITDA also jumped by 50% on a low base. Similarly, a good set of numbers from a smaller company, Fine Organics. Revenues nearly doubled to 240 crores, and net profit also increased from 13% to 37%, and that also reflects in the operational performance, where the margins expanded from 17.5% to 22.5%, but good operational EBITDA growth as well for this one. Shaily Engineering Products, the next on the list, with the revenue growth of 28%, net profit growth of 29%, and when it comes to EBITDA margins, a slight disappointment there, because the margins have fallen by or contracted by 100 basis points, but overall good set of numbers. Oil India, revenue growth of about 13% is what we saw for the quarter. Net profit, however, dipped by 18%, but that's largely to do with the higher other income component in the base quarter. But if you look at the operational performance for Oil India, you will see that EBITDA has grown by as much as 75%. And finally, Ashok Leyland, Bilcon, my bad, very weak set of numbers here, basically below estimates. So revenues dipped by 3%, net profit grew by about 12%, but that is once again a factor of higher other income component during the quarter. But if you look at the operational performance, EBITDA fell by about 12%, and margins also dipped by about 120 basis points, so below estimates for Ashoka Bilcon.
The panel headed by Justice Yadave has recommended that SEBI widens the consent mechanism. As part of its proposals, the panel has suggested that SEBI allows cases of insider trading, front-running, mismanagement of financial statements to be settled via the consent mechanism. This comes with riders that SEBI needs to be satisfied that the alleged defaulter has made good on the losses and there is lack of market-wide impact. However, the committee has also recommended that repeat offenders, willful defaulters, and economic offenders should not be allowed to settle cases. One interesting recommendation is allowing confidentiality if one of the partners assists in the regulator in its investigation.
Tata Steel reported in-line set of numbers. If you start with the total income, that's the top line growth, we're looking at a 28% uptick there to a number of around 37,833 crore as compared to nearly 29,650. EBITDA for the company has risen on consolidated basis by as much as 30% to a number of 6,468 crore, which is pretty much in line with the estimates of around 6,762 crore. Margins have come in at 17% as compared to 16.8%. That's pretty much flattish growth and in line with expectation. Profitability of the company, however, has missed the estimates, but then has risen more than double. It's come in at 1,954 crore as compared to 918 crore. Now remember, we were working with an estimates of around 2,700 crore. This is mainly on account of an exceptional loss that the company is facing. An exceptional charge of a 335 crore primarily includes a provision for additional interest on differential royalty on coal. Reported consolidated EBITDA per ton is seen around at 10,000 mark as compared to the 8,479 that we've seen in the corresponding quarter. Higher spreads have led to good set of operational numbers. Profits would have been higher had it not been for exceptional loss as well as higher tax outgo. EBITDA too would have been higher had it not been for the losses of other EBITDA segment. Now other EBITDA losses stood at around 400 crore as compared to a gain that we saw around 743 crore. This was mainly on account of unrealized non-cash adverse forex moment which has weighed on the operational performance. Nevertheless, it's in line with estimates. A key parameter that I'd like to highlight will be the Indian operational performance, which is pretty much in line with estimates or better than what we were estimating. The number has come in at 17,250 rupees as compared to the estimates of around 16,250. European business too has registered a sharp uptick around that 1,600 rupees in absolute basis on YOY level. Well, in terms of guidance, Indian prices are expected to remain not range bound given the seasonality, strong underlying demand to aid the recovery post monsoon, which means we'd be looking at higher growth in the second half of the financial year. European business demand is expected to grow by 2.1% in 2018 by the growth in construction and mechanical sector and SEA, where the demand is expected to remain sluggish for the course of 2008.
Okay, the big number for today will be Sun Pharma. What are we anticipating? We are seeing a 12% top line growth for the company. Profits we are seeing at almost 911 crores compared to a loss last time around because of a one-off exceptional provision that they have to make. As far as the EBITDA is concerned, we are seeing close to a 23% hike as far as the EBITDA is concerned, which will mean that margins are expected to come in about the 22% mark this time. Now, Taro is an important part for Sun Pharma. They have already reported numbers which were much weaker than what the street was anticipating. So that is why probably the expectations would have come out for Taro this time around. India business is expected to grow, and that is something that will lead revenues apart from it on a low base. As far as the US market is concerned, on a year-on-year basis, expect flattish growth, but with Taro coming out with weak numbers, it could be slightly even weaker than that, and a 10% sequential downtick this time around. They've launched some drugs, you know, they've launched Welchol, they've launched Yonsa. There was resolution of the Halol plant, but apart from it, the pricing pressure still continues, competition still continues, so that will offset the weakness on the pricing front. R&D costs are expected to be lower this time around, and that is something that will aid margins for the company. And the specialty pipeline is going good for Sun Pharma, so there will be cost related to that, and that could also impact, that could also get in higher cost for Sun Pharma this time around. But overall, post Taro's number, it is expected to be muted for Sun Pharma.
Well, stories like that and many more on the website bloombergquint.com. If you look on, you'll find them. Here are just a couple of the other stories that you'll find if you do log on at this moment. Paytm will this month start selling mutual funds through a separate platform as it tries to expand its financial services footprint. A company spokesperson told Bloomberg Quint that a registration, which has been launched internally as of now, will be thrown open for everyone through the official website of the company sometime this month, and only direct investments will be allowed. A safeguard duty won't be imposed on solar cells imported from China and Malaysia for the time being, complying with a recent order of the Odisha High Court, according to a Finance Ministry notification that is still not public. That's all you need to know going into trade today, and it's going to be quite a busy one before the holiday tomorrow, so do stay tuned for everything that you need to know at the start of trade. That's on Indian Open, and that begins in just a few minutes. This is Bloomberg Quint.